At least $15 trillion, that is the amount of money injected into the global economy to save it by banks from the pangs of COVID-19 ever since it started in the Chinese city of Wuhan in December 2019. Just how far have African banks contributed in that global effort to stabilize the markets in the era of COVID-19? And what has been their influence, especially in helping small and medium-sized enterprises? My guest today is an experienced banker who equally serves as the Chief Executive Officer of the United Bank for Africa. Jude Anele, welcome to Globewatch.
Thank you very much. Thank you for having me. Pleasure.
You just heard my opening remarks that at least $15 trillion have been injected into the global economy by the banking sector to balance the books, to make sure that the checks are not failing ones in a failing bank. What has been the role of the African banking sector in balancing the books?
Thank you very much. I think banks in Africa, over 1,000 of them, have done quite a great job at ensuring that the shock arising from the pandemic that started early in 2020 does not completely wipe out businesses across the continent. I must say that banks have intervened in very many different ways, directly and indirectly, so to speak, working closely with development financial institutions also across the globe and across the continent. I think what banks did initially is to take a critical look, more like a diagnosis of how the pandemic has impacted lives, impacted businesses, and the critical areas of intervention that would be needed. It was based on that diagnosis that the action plan was actually set out by banks in collaboration with the central banks across Africa to know how to support this business. First of all, the disruption impacted businesses and individuals in two ways. One, movement was restricted, and that simply meant that factories closed down. That simply also meant that people stayed at home. So the financial flows were constrained. Meanwhile, businesses that had taken loans from banks, the loans were running. The due amounts were also, of course, falling due, and then people were struggling to repay. So the first thing that happened working with the central banks across Africa was to try to see how these facilities could be restructured. The tenor of maturity of those loans extended in such a manner. In fact, some gave moratorium. That means payment was even suspended for 6 months or 1 year, so that by the time it's 1 year, it's expected that business will have recommenced and you can start repaying. And then there's an extended repayment period. Typically, if you don't service interest on a loan for, say, 6 months, you are required by regulation to begin to take provision on those loans. What the central bank also did as a result of COVID was to give forbearance. Forbearance means that I allow you not to make those provisions because I know the constraint that you have. So that helped to also relax the banks. But again, there were critical sectors of the economy that required finance, especially the health sector, because so much money was required to produce not only the vaccine in terms of the research is going in, but the personal protective equipment, whether it's the mask or the gloves or the sanitizers and all that people were using to protect themselves. Right? So banks also needed to finance businesses that were in those fields that were producing this, whether it's the vaccine, whether it's the sanitizer, the gloves, and all that medical equipment that is required to protect businesses. And then there were also some guarantees that some development financial institutions provided to give banks confidence to continue to lend to critical sectors. I would say largely in terms of a proportion of this 15 trillion you talked about that came to Africa or was generated amongst African banks is actually less than a trillion, because the impact of COVID pandemic in Africa was slightly less than you have either in the US, Europe, or Asia. And it wasn't expected to be so. So I think Africa was very, very lucky. We were impacted all right, but in comparison to the rest of the world, it wasn't as bad as that. And I think the central banks were quite understanding and helpful, and like in addition to development finance institutions.
And in terms of corporate social responsibility in these hard times, what did you people do to accompany the governments in responding to the National Solidarity Funds, which were established across the boards on the continent?
Absolutely, across Africa. So that's the second element. So apart from giving money to businesses in terms of loans or extending the repayment tenure of their facilities, UBA, for instance, and I think most other banks did the same, in most jurisdictions that I know in Africa, made cash donations to all the countries, 20 countries that UBA operate in. Okay, I'm aware that in Cameroon, UBA gifted the government of Cameroon about 150 million ZAF to support it. And across Africa, Nigeria, Ghana, Senegal, Cote d'Ivoire, Chad, Gabon, all over. And most other institutions, not only banks, also provided that kind of funding, which helped government at least
what
provide
was the complete
those
package? The envelope from the UBA was around much?
Almost 100 million.
Okay.
Absolutely.
Like you said, there are at least 1,000 banks on the continent, commercial, central banks, microfinance institutions that are operating. What kind of pressure have they been ever since COVID-19 emerged?
Well, I think it's the general slowdown of businesses also impacted banks. But a bank is a business too. So where you don't have people coming out, where businesses are shut down, nobody's coming to the bank because of safety and all that, businesses also slowed down. Transactions went down. How do banks make money? There are two ways banks make money. One is through what we call interest income. So when you lend to customers and they pay interest on the loan. The other part is not interest income. We call it non-funded income, where through transactions that people do, you generate fees and stuff like that. So when businesses are shut down and you're not lending to anybody, you're constrained, you're not making money, so you're in trouble. Two, when there are not transactions going on as it used to be, or the volume has dropped, the fees you make from transactions also completely goes down. So banks have had to struggle themselves. Okay, but I think what keeps banks afloat is actually more of the non-funded income side, which is the pandemic compelled people to go to the electronic platforms to be able to do their transactions. And these are new areas that had issues of adoption. A lot of people were struggling to adopt those digital platforms, but COVID compelled them to go there. So banks made money there. Two, even when we opened the business partially to people, like customers started coming, there are also health issues. You have to protect the customers coming to your banks. You also have to protect your staff from being infected, as a matter of fact. So having to set up all protocols, sometimes you go to banks to manage the queue, you have to provide some facility outside so that you don't have the banking hall congested, and then have to come up with a queue management system so that nobody jumps the queue and all that. Changed entirely how banks handle business in the first place. And it was additional cost to doing business. People are getting used to it now. People are getting more comfortable with it. Before, they used to be afraid of hacking, used to be afraid of cybercrime and all that, but all those fears have dwindled a bit because the necessity to transact away from the banking hall has heightened. So I think it has really disrupted the way banks do business. But what has happened here, even legacy banks that weren't looking at the digital side, digitizing their business, began to find that if they didn't do so, they may go out of business soon, because most smaller fintech companies were coming up to breach the gap.
Did you face any kind of liquidity pressure?
Absolutely. So that's the point I was making, that for you to, if people are not coming, they're not going to make deposits. And remember, because people were staying at home, you're not able to go out. If you had cash, you better keep your cash. Because if you put the cash in the bank, you may not go to the bank and be able to get money. I've seen long queues on ATMs, people trying to withdraw money. Who wants to do that when you can keep your cash at home? Even if you went to the ATM, the risk of putting your finger where everybody has put his finger and risk contracting COVID was also high. So deposit flows to banks also dropped, as a result. So in managing those liquidity flows, what helped banks was that banks were also not lending aggressively. So because we are not lending, because businesses were shut down, so we're able to manage the little liquidity, the deposit we had in the system provided.
One of the sectors which has heavily suffered in this time is the small and medium-sized industry, which the banks give them a lot of assistance. What kind of help has the African banking environment given to this kind of economic activity, which employs millions in Africa?
You're absolutely right. You know, like they said, the SMEs are the engine room of every economy in the world. And if anything happened to that segment, the economy is completely wiped out, especially when it comes to employment and even contribution to GDP, not just employment alone. And they were impacted most, in my view, because most of them are also not resilient. They don't have enough buffers to survive during times of crisis. And what I think banks did was that working with a couple of development financial institutions, in fact, I was part of a work group that was set up to handle that. We first ran a diagnosis of the type of impact COVID has had on these businesses. We checked which sectors of the economy were most affected, and then we made a list of 5 sectors. And we then asked ourselves, what type of intervention would be the best? Is it lending money to them direct? Is it providing guarantees to them? Is it providing what's called capacity building, which is more like educational programs on how to manage businesses in times of crisis for them and all that? And we chose the ones we thought was critical. And then we started implementation from, that should be February this year. Okay, so there was an aspect of direct lending to critical sectors like health, education, and manufacturing, those that are adding value, so to speak. And then there's also provision of guarantees by DFIs, development finance institutions, for banks to lend to certain other sectors they really have challenges lending to because of the risks involved. And thirdly, in fact, to me, most importantly, providing that capacity building, teaching businesses how to manage in times of crisis, how to create buffers in their books and balance sheets so that if there's a problem, at least they can survive for 6 months or 1 year before real crisis hits them.
What did you spot out from the study as the greatest test or challenge to small and medium-sized enterprises? Governance or structural issues?
So I would say structural. Structural would then include governance. When I say structural, there's no buffer. There's no buffer, you know, so cash is king. Every business is always taught to keep cash. No matter how much assets you are investing in, you must keep adequate cash. Business is done with cash, okay? So a bank overdraft is also a source of cash, so to speak. But if the bank overdraft is withdrawn, you're in trouble. Okay, so what we found was that most small businesses did not have enough buffer to see them through the crisis or to see them far into the crisis. So the first few weeks of the crisis, they were already struggling. That was what we found. Okay, so of course the way to do that is to, first of all, those that have already taken money, find a way to give them some moratorium and then extend the repayment period for them. Okay, those that haven't taken, provide some guarantee, including insurance in some cases, to be able to do direct lending to them. And then thirdly, of course, organizing those seminars where then able to build capacity to teach people. Because COVID is not gone away, it's still here. Of course, it's not as heightened in terms of fear as it was last year, but the impact is still here. So teaching businesses how to best have good structures, have good buffers, have good controls and ratios in managing themselves is critical. And it is most critical in that layer, that very important layer. Because most SMEs are just individuals who might not necessarily be trained in the field they are going into. They just go into that field because a friend has succeeded. Okay? So they start a business because they have the capital. And I keep telling people, I've done some work in the SME space instead of studying them and supporting them for over 15 years. Most people think that finance is the greatest problem SMEs have. It is not true, by my estimation. What you ask yourself is, why is finance the problem? Finance is the problem because of the structural issues they have. Why do banks don't lend to them? Banks don't lend to them because they don't trust that they will pay back in the first place. They don't trust that this business is structured for the long term. So as you look at governance, so you have a man running the business.
It's not a bankable project.
Absolutely. You're head of HR, you're head of control, you're managing director, you're chief marketing officer.
Their risk level is so high.
You die, your business dies the next day. Okay. So why would somebody give you money?
Okay. The global digital market by 2025 will be roughly $25 billion annually. The whole world is moving towards digitalization. From a banking perspective, how did COVID expose this as something that the banking sector cannot do without in its future?
I would say that banks, despite all that has been said, we're actually far ahead when it comes to digital platforms. Some are behind, but most banks had seen this over 10, 15 years ago. Most banks have said it, traditional or legacy banks, I would call them, they've seen the risks of doing banking the old manual ways and started digitizing their processes, both back end in terms of back office processes and even front end customer interaction and how you process your transactions and then serve your customers. Now, I think even before COVID, the advent of fintechs, these small financial technology companies that are providing faster means of moving money up and down and making payments and all that, has actually awakened the banks to realize there was a risk that if they didn't start digitizing, they may fall into problems. The advantage the fintech has is because they don't have legacy platforms, old systems and all that. They don't have too much fixed cost in terms of big buildings and too many employees. So they are very flexible. But the advantage the traditional banks had was that they had the trust of people. People trusted them because they had physical locations you could go to if you had a problem. So there was that confidence thing. But smart banks had since moved to begin to digitize. The key word is contactless as much as possible. If you can avoid contact, go ahead and do it. What do you need a bank for? You put money, you take money. But you are putting money in a bank because it's cash. Assuming somebody was going to give you money and used some mobile wallet to pay you, why do you need cash when you can use the same mobile wallet to buy something in the shop? Okay? 2, you want to take money from a bank. Why do you need to withdraw money when what you want to use the money for, you can as well use electronic means to make the payment? You need a loan from a bank. Why do you need to come and fill a form in the bank when you can actually use your mobile app to apply for a loan and get it given to you? Even businesses are doing it today based on using internet banking to apply for loan, digitized end-to-end in UBA, so to speak. So I would say most banks have actually gone ahead, but COVID has helped those that were lagging behind to realize that it's very, very key to digitize their processes. Otherwise, something worse than COVID may happen in the future, and then they'll run into trouble.
Well, I'm glad you said that something worse than COVID may happen, and that is what probably the banks are facing ever since the fintechs you are talking about came in to compete in the banking sector. Tell me, what is your outlook for the banking sector in the next 5 years in Africa when you look at new ways of having liquidity at home without passing through the traditional banking? I'm saying of mobile telephone, financial services. You understand clearly what I'm talking about.
Yeah, so, so let me say that some people see banks and this, what they call fintechs, as competitors, okay? We say that even the term fintech is not completely correct. So it's not fintech, they are tech fins. These are technology companies that are foreign into finance. They are not finance companies foreign into technology. Okay, so, but it's more of a complementary relationship, if you look at it well, than a competitive relationship. That's what we call banking as a service, with the use of APIs, integration platforms across. What banks have done is to begin to collaborate, okay, with fintechs to provide these services, because the fintechs don't have the reach in terms of articulation of touch points. At the end of the day, like I said, cash is king. At some point, somebody will need to cash out. So they don't have the network that will need them handle that. Banks already have that. So most fintechs are providing their services to banks right now. Some banks on their own are generating technologies that are close to what fintechs are doing today. So in the near future, I actually don't see much of a competition between legacy banks and fintechs. There's an advantage to being a fintech, there's an advantage to being a big bank. UBA today, that I know of, can compete with any fintech anywhere, and with even bigger advantage, so to speak. So I think that the people more at risk will be the fintechs if they don't find a way to also integrate to banks. And what most banks have done at UBA is provide those platforms. So I'll give you an example. Yumi. Yumi is a new mobile money company that just got a license from the central bank. Okay, BEAC, working with UBA. UBA is providing the platform for them to do the mobile money. MTN, Orange here are applying for mobile money license. They have to ride on the platform of banks. Okay, so You can't do it on your own because you need a bank to do that. That's what called banking as a service. Provide your license allows you to do mobile money. So if somebody else wants to do that, you provide that platform so that they can ride on it. So instead of competing, you just compete. I call it competition. You collaborate and maybe compete at the same time. So I think if we see more from that complementary cooperative perspective, there won't be anything to worry about. Once you see it and approach it from that perspective. If you think you're going to compete, of course, the fintechs will outlast you because they are nimble, they are very nimble. It's easy for them to maneuver through challenges than big banks that have legacies all over the place.
Finally, one of the fallouts of COVID-19 is massive unemployment and targeting youths in particular. What has the United Bank for Africa in particular done in encouraging entrepreneurship that can leverage self-employment?
Okay, a lot, I would say a lot. And a lot in terms of significance, not in terms of number of things being done.
Okay.
Okay, now there was a forum organized by University of Douala. I think the title of that forum was Employability. How employable are graduates? And I was one of the speakers at the forum. I did tell them that when we are looking at university graduates and we still talk about employability, I think we are sending the wrong signal. So what you are putting in the heads of these young men and women is that when they come out of school, they're waiting for somebody to employ them. It's a big challenge. Okay, why can't they set up their own businesses? Now, of course, to be able to do that, you need to understand how a business is run, which goes back to dealing with issues of curriculum in schools. There's no curriculum in most schools that teaches entrepreneurship. Across every course, you have that as a general studies course. The idea is that when you come out, you should be able to set up. Assuming you don't get employed, you can employ yourself. If you have good ideas, people will bring money, support your business, and then you can grow from there. That is one. However, entrepreneurship is also not easy. Because of the challenge they have raising funds, Tony Elumelu Foundation, Tony Elumelu is a group chairman of UBA, every year gives seed capital of $5,000 to almost 5,000 entrepreneurs across Africa. Across Africa. We'll call it Afrocentrism. So it's focused on Africa.
Afro-capitalism.
Afro-capitalism or centricism, as the case may be. That's what we call it, Afro-capitalism. Okay. Develop these young Africans that will transform Africa, transform the continent in the future. And that seed capital is not repayable, but there's a hand-holding that goes with it. There's a mentoring, they appoint mentors for them to guide them through, because the death rate of this small business is also very high. The mortality rate is quite high. So in addition to that, let's say in Cameroon, UBA with most universities, University of Douala, Yaoundé, Boya, has this program where they employ these young chaps while in school for internship. So if you go to this head office today, every department has 1 to 3 interns working. Okay, this is a way of also providing them, letting them understand what goes on in banks, so that when they come out, they also become highly employable, especially by banks. And then even after school, we still employ them as interns. Some of them waiting to go and do their masters. So we have 2 types of interns here. We have interns here that are student interns. We have interns here, people trying to get experience in banking before they proceed on their education. That also tries to employ them. I will give them some stipend to help them for transport, because what matters is not the money we're paying them, but the ideas they are getting and the learnings they get from the bank. So I think what Tony Elumelu Foundation has done, and through other non-financial services we've provided, that should be number 1 in terms of entrepreneurship in Africa. Okay, we continue to push that, because we know that those that will transform Africa are these young and small businessmen and women that we are training today.
The Chief Executive Officer of UBA Cameroon, Jude Anele, thank you very much indeed for being guest on Globewatch.
Thank you, my pleasure.
You're welcome.
Thank you.
Where were you, particularly where you were named recently as one of America's best young medical doctors, and more importantly, of African descent?
So, I was doing what I do almost every day. I was in the clinic seeing patients. And I took a break to look at my work emails, and I got the notification of the award.
What was your first reaction to appear in America's Honor Roll? A few months ago, I received a young lawyer. He happens to be the first, equally to be of African descent, to be named America's best young lawyers under 40. I'm talking about Dr. Zache Puga. What was your first reaction?
So my first reaction was that this is different. This is a different kind of award. I have received many awards in the past, mostly directly related to my research or related to clinical work when I practice. But this award was different. It came at a time where I had lost my dad earlier. So I lost my dad in January of 2021, and this was the first award that I would receive without having my dad. So this was very special to me.
Did you consider the award empty in the absence of your dad? How strategic had your dad been throughout your professional journey?
I would say that my dad has been very instrumental in my journey. He was a teacher and a high school principal, and as you know, teachers instill, right from a very young age, they pay attention to detail and they make sure you learn the best. He was also very encouraging, and he always told me never to give up and that the sky's your limit. You have to keep going on. And when I received the award, although he wasn't there, I still remembered all the things he taught me, and I dedicated this award to him.
Okay, sure. The US is 50 states. You were checking your work emails. In which of the states, in which of the cities? Were you in California, in Maryland, in Washington, in Virginia, or in Yale, where you are a PhD fellow?
So, I mean, definitely I wasn't in California at the beach.
You were not in Santa Clara?
I was not in Santa Clara for sure. I was neither in Hollywood or anywhere else. I was at Yale University at the time.
Okay.